Looking for a fast-charging, ultra-responsive stylus for your iPad? Meet the 2X Fast Charge Active Stylus Pen, designed for 2018 to 2025 Apple iPads. Take your creativity and productivity to the next level. Click the link in the video description to shop now on Amazon.
Hey there, Trega fam. Today we're diving into why Caterpillar's stock outpaced the market by a landslide. You see, CAT's latest close session saw it soar 1.26% higher, leaving the S&P 500 in its dust with a mere 0.26% gain. Now, that might not seem like a lot on paper, but when you consider Caterpillar's impressive performance prior to today's trading, where it gained 11.15%, that's a pretty significant swing. But what really caught our attention was the fact that CAT's shares have been climbing higher than the rest of the industrial products sector, which is currently losing ground at a rate of 0.67%. That's some serious momentum right there. And when you look at it in the context of the S&P 500's overall gain of 2.87%, Caterpillar's outperformance starts to feel even more impressive. Now, we know that investors are keeping a close eye on Caterpillar's upcoming earnings disclosure, which is expected to reveal some key numbers for the company. And according to our latest consensus estimates, those numbers aren't looking too shabby. We're talking EPS of $4.56 and revenue of $16.7 billion. That's quite the boost compared to last year. But what about the bigger picture? The Zacks consensus estimates predict earnings of $17.91 per share and revenue of $64.76 billion for the entire fiscal year, indicating a pretty substantial dip in growth, 18.22% down from last year. However, it's worth noting that analyst estimate revisions are often a sign of changing business trends, and Caterpillar's current stock price performance suggests that investors are optimistic about its prospects. Now, I know what you're thinking. What's the secret sauce behind Caterpillar's success? Well, according to our research, changes in analyst estimates can have a pretty big impact on the stock price. And as it turns out, Caterpillar currently boasts a Zacks rank of 3, which is a hold rating. Not bad. When we look at Caterpillar's valuation metrics, things get even more interesting. With a forward P/E ratio of 26.01 and a PEG ratio of 2.83, that puts CAT in the premium territory compared to its peers. And when you consider that the manufacturing, construction, and mining industry is currently ranked 227 out of 250-plus industries, Caterpillar's stock stands out as one of the bright spots. So there you have it, Trega fam. Caterpillar's stock has been on a tear lately, and we're not surprised to see it outpacing the market. With its impressive earnings, growth prospects, and premium valuation metrics, this is definitely a stock worth keeping an eye on. Stay tuned for more market insights and analysis straight from our channel. Thanks for watching, Trega.